Welcome to the Trading Battle, the only internet show where we pit two great traders against each other every single week to trade for honor and charity against each other. My name is Boris Schlossberg. Before you do anything, make sure you like and subscribe to our show because you're going to get the best trading content in the world by watching us every single week. Let me introduce this week's pair. I'm very, very excited to introduce both traders this week. In the right corner, we have Anka Metcalf from TradeOutLoud. Hey, Anka, how are you?
Good morning. Good morning, everybody.
Good morning. We've made her get up early, and she's a little croggy, but she's ready to do battle with us. And in the left corner, we have Chris Laurie, who's joining us today from Canada, from near Toronto. Chris from Pro Traders Club. I'm sorry, ProTradersClub.com. Chris is a great longtime FX trader. Hi, Chris. How are you? Good to see you.
Thanks a lot for having me. Hello, everyone, and thanks for joining the show.
Great. We're very, very excited to have both traders here. They are super interesting, very, very different type of traders, trading lots of different assets. We're actually going to jump in and force our two traders to make the first trade of the day, to get their toes wet and see how the markets are doing. And then we'll talk a little bit about the markets and everything else with them. So I'm actually going to go to Chris, and you tell us what's your trade that you want to place in the markets now, given that it's Friday and we have a relatively quiet consolidation day in front of us.
To get things started, I'm going to go with Ethereum. Here we're seeing a few ticks back. I'm going long on Ethereum, and the stop is going to go below at 37.39, and with a profit target for today at around 38.49.
Okay, so is this going to be a trade you want to try to hold pretty much through the hour of the trading session? This is your opening day trade.
Yeah, and we usually get a little bit of a volume surge right around between now and 9 a.m. And I don't think it's really going to be too contingent upon retail sales. I think we've got some pretty good support here.
Interesting. Okay, sounds great. Anka, talk to me. What is looking good to you right now on the charts?
All right. So I don't know if you guys can see my chart, but as the first trade, we've had an incredible day yesterday with the price just rising in all the futures indices. So my first trade is going to be in the futures indices. Even though they are hyper extended, they're still incredibly bullish ahead of the open. In fact, the futures indices, the mini S&P is up already about 0.36%, up 16 points to the upside, and I've already pre-mapped the trade right here. To me, this is a breakout over 4449, so 4449.5. Entry price, the stop price is going to go under 36, and then looking for a target all the way into 56. And let's see if we get any continuation right after that. This is the first trade.
Okay, sounds great. So you really think the S&P is in a breakout mode, huh? Above that 449 level.
It has been consolidating very solidly, I have to say. So it has been really, really solid since 10 o'clock last night. So throughout the London session, it just stabilized. It did a little bit of a pullback, but the pullback came, so this little pullback here came right into the resistance from the close from yesterday. So it has been holding really well. In fact, these are called minor support areas. That's how I call them. And in fact, they're a true definition of an ongoing trend. You can only find these set up the prior support that is set up into the prior resistance is only present in ongoing strong trends. So this is my bet right here. In fact, it's doing a little 15-minute rotation right off the 20 SMA, and it has been really nicely consolidating into this area. So yeah, it's a go.
Is this what chart is this? What are we looking at? What time?
This is a 15-minute. Yeah, this is a 15-minute mini S&P. You could do it as well into the 5-minute, but since because it's in the middle of the channel, I don't want to risk anything because this is like 50-50 chance. So this is going to increase the chances for higher. And in fact, if we would have had a pullback right now, but we're not, this would have been, for example, a nice buy area with a really tight stop. But as of right now, because the price is really in the core of the range, I'm going to go for the breakout.
So to understand, you're long looking for that breakout. You think it's going to...
I'm long looking for the breakout. Limit order 49.25 or 49.50, and looking for a target of 56. I already pre-mapped it here. 60 to 63, it's going to be target 2-3, and then back into 65, 68, the next few targets. This would be like for the entire day.
Okay. One other question just that I found interesting. You said it's only in trend when you can see this consolidation. We can go back to that chart. I'm just curious. What did you were pointing? Yeah.
Yes. And I was pointing this low. So this pullback is actually rooting and it's finding support into a prior high. So these types of trades I love because they are supporting the ongoing uptrend, because you could only have higher highs and higher lows. And when a prior low revisits a prior high, then look at the rotation. And then again, if you have the clue of having another higher low, then this is again confirmation that it may be ready for another leg higher.
So just curious, let's say we're looking at that chart. We have that prior resistance test, the red candle. Then we have that green candle. This is a 15-minute chart, like that first green candle that bounces back. Would that be a buy signal for you?
Absolutely. Absolutely. This would have been a buy signal because it's confirming a higher low compared to this low, even though it's very shallow, but it's confirming a higher low, and then it's already triggered for higher. So if you're trading this, so for example, because I consider it overnight trading still. So this would be like take profit here or trail by pivot. So this is one of my favorite things to do if I'm trading the overnight. But
trail, sorry, can you repeat that again? Trail by what?
Trail by pivots. So for example, so for example, let's say I get in here on this candle, I let the price go up, I don't take any profits, or you decide to take partial profits. And when the price is pulling back, you just wait, just sit back. You still have your original stop underneath the pivot, but you just wait, and you wait for another rotation. Let me just zoom in a little bit here. Okay, so you wait for another rotation to happen. So at this point, you already have the next rotation. So now is the time to lift your stop just below this pivot. So it's pivot trailing. So because the original stop was just, let's say, below 38. So let's say 38 was the stop here. And then the price went all the way to 47. And then, like I said, as soon as you're getting, very close to a prior resistance, and in fact, here you have just triggered just slightly above this resistance, you can take partial profits. I always like to take half of my size into target one and then wait for a retest. You either do candle, for example, sometimes I do, but when I'm in a momentum trade, I do candle trailing. So for example, here, so at the close of each candle, so this is the trigger candle, I don't act upon it. But then when I see the next candle, for example, then I let this candle close. So we're going to have to wait 15 minutes, because if it's a 15-minute chart, you have to wait and respect the time frame. And then once this candle is completed, this candle opens, you either take a little bit of profit because it has already triggered above the prior high. But here, for example, I would put my stop below this candle low. So this low is 44, 42, 75. So 42 would be my stop. Give it a little bit of room. So as you can see here, you're still in the game. You always have to give a little bit of wiggle room, because price needs to inhale and it needs to exhale. So it really needs a little bit of space. So you're still in the game.
That's a great way of putting it. That's a really, really interesting way of putting it. Price definitely always inhales and exhales. It's the it's the wave structure of price. I'm always on the exhale part. I'm always on the opposite side of your trade.
But, you like the shorting part?
Yeah, I'm on the shorting part. But it's really, really interesting at how you view price action. We're sort of coming at it from same strategic idea, but just different sides. Chris, if I could just take a look at your ideas. Now, you're long ETH. You've obviously, how long you been trading crypto? For a while now?
About a year and a half more intensely.
Year and a half more intensely. What did you start with Bit and then you kind of moved to ETH, or are
Yeah,
you a
started
full
with
crypto
Bitcoin.
bro at this point? Do you
Started
trade
with
everything?
Bitcoin, went to Ether and Cardano and the usuals, and I've really my core portfolio really is more or less call it the majors and reasonably well spread, but the challenge with short-term trading crypto is the spreads and the cost and so forth. You've always got to use limit orders and be mindful of the specifics of how the spread widens and narrows. And so there are some swing trade opportunities, and you do have to be very conscientious of significant pullbacks. So and the volatility, because the market still is it's going to take some time for that market to become fully liquid and stable from a volatility standpoint. So I like cryptos for just holding some longer term positions. And so Ether today should see a little bit of a surge, and and even through the weekend. But but I my main focus is FX, and when things are not all that volatile, I'm on gold. I'm always watching gold. In fact, I like gold right now, long right now. But
take it.
Yeah, let's do gold long right now at 1782. The stop at 1779, and usually what happens with gold. Let me just find that chart here. I'm not sure if you've got here.
Yeah, we're looking at some FX. Okay.
So usually what happens with gold is we get a volume surge right at around 8 a.m. Eastern Standard Time. So you'll probably see price has really just been drifting back. If I can pull up my chart here, price is just kind of drifting back into this sort of illiquid space right here. And it's looking like it's building a little bit of a base as we head towards that data. Now, the main risk right now with any U.S. dollar crosses is that, and I think even with the indices, is we have event risk at 8:30 a.m. and I think it's going to have some impact to the degree that I think short-term positions are quite vulnerable, because I think that we can reverse today. So my view is, if I'll pull up an S&P chart here, I just want to give a little bit of a sense as to what I'm thinking. So the S&P is.
Chris, we need just a clarification. Stop on gold was 1877.
1879.
79. Sorry, just letting my producer know. Okay.
So the target there is 1779 stop. The target is 1786.
Okay. See, I doomed your gold trade for you by adding $100 to it. So now it's going to go down. Go ahead. So you're talking about the S&P.
We've got event risk. We've got event risk at 8:30 a.m. with retail sales, and the market. The market's looking pretty flimsy on the long side. So I think one of the things that I'm watching for right now, because in these scenarios, when you've had like a pretty strong move in a previous day or previous couple of days, the event risk I think is significant enough that post the response to the event is we could see continued bullishness, and it washes through some liquidity, and then it reverses after the initial reaction to the event. So I'm looking for maybe a bit of a sell-off post event, right? So so that's kind of the risk between now and then, but we've got to make some trades now. So I think the other thing that happens is that since yesterday's close on the S&P, we have seen the off-market price rise. And usually what happens is, before we see any significant continuation of that move, we usually draw back down and kind of fill in that gap from the previous day's close before it continues. But I like long S&P here as well.
Got it. Interesting. Okay. Great.
So until the
Anka's S&P trade is working well. She's leading right now. So girl power.
That's all Mandy.
That's on Mandy, right? So I want to come back to something you said that was very, very interesting. Both with ETH and with gold, you made a comment that around this time of the day, we usually get this kind of a flow. And this is super interesting to me because obviously, you've watched thousands and thousands of hours of trading, and maybe you noticed the sort of the pre-market positioning. And I wonder if you could share a little bit about some of those insights that you've seen, especially, we can take a look at the ETH chart, which obviously, we have a position in right now. And you could just kind of run us through as to what do you say usually happens around this time, and how do you handicap that trade action, price action?
So where we're at here, if I pull up this gold chart, I still think that if we just stabilize into today's event, gold can draw back a little bit further and then see a surge. But usually at 8 a.m., we're going to get a surge one way or the other. So you want to be.
So I'm just curious, is this something that you've noticed over and over again, that around 8 o'clock there's and how do you learn about that? Is it a volume flow? Is it a price flow? Is it something that, I'm just curious how you came about to that realization.
So many years ago, Boris, did you ever see the dating game where because you understand your spouse to the extent that you can kind of predict what they do because you've spent time with them day in and day out. So
exactly.
So if you liken it to just staring at these charts for so many hours and you find that every day, and of course, the manner in which price is setting up into the volume surge is going to be a largely determining factor. So you just, if it's setting up well, where you think you're at a good level of support and maybe it's made a few attempts at support, then when the volume surge comes, it's probably going to draw, in the opposite direction. In the opposite
direction. So super interesting. So it's interesting. So if it kind of holds support, holds, and that this is good, that this is a time when volume comes in, then it's very likely it's going to go up as the support holds. It's super interesting as a handicap.
Yes. So like in this scenario right here, if when the volume surge comes, you want to be, if it's going against you, you want to be out straight away. So you're not going to give it much room to breathe.
Got it. Super interesting. So so you're either right or you're out. Very, very interesting point. Okay, super. We're going to go to our challenge number 2 now, where you got to pick, Chris is actually running gold. He's running ETH. Anka is running S&P. I'm not sure. Chris, did you say you wanted to get long S&P as well?
I like the S&P long, up to, I think long S&P just through the previous day's highs and then out.
Okay, so you want to be, so we're going to get long market right now, S&P for you as well. Where would the stop be?
So the stop is going to be at 44.50. Okay. And the exit is going to be at, I think we can hit into 44.70.
Okay. All right. So we'll hold that position. Now I want to go back to Anka, because Anka's holding one position. She's winning on it, but I got to get her to trade a little bit more. So tell us, what other assets look interesting to you? Is gold looking okay? Is gold, oil, maybe even FX? Anka generally is an indices and a stock trader, and a great one at that, by the way. She's got a great room, but she has traded FX before. So I'm just curious, what's looking good for you right now for our challenge number 2?
All right. Before we dive into FX, I just want to put another trade in Bitcoin futures.
Okay.
And it's long 59,950 with a stop, protective stop 59,274, and then looking for a target into 60,320. And then if it can extend higher, this would be like a target too. So I would like partial profit.
That's a big number. The 60,000 is a big number. Yeah.
Yes, it's really a big number. It's really a big number, and it's coiling around this number. And I like that the higher time frames are also contributing to this cluster. I also love to look at the 4-hour charts, especially in the overnight. So this would be a danger zone for me, because in sense of price action, if it trades below this low right here, it's going to start pulling back. And going back to our discussion earlier about minor support that I was playing on ES, I noticed that we have a prior high right here. So if this low is not going to hold this whole entire area of 274, then the price is likely to come back into the 59,020, and then it's going to come back into this magnet line of this 10 EMA. So I think this is what it's going to do right here. And from this point on, it's going to be bullish again in case it's going to have any kind of rotation present. So I like that the higher time frames are confirming the momentum for the upside, and also the 15-minute looks pretty solid right here. I would just love to see a close above the 20 simple moving average. I also love to have the participation of it because it creates a little bit more velocity. And once it closes off, so yeah, 736. So we still have a little bit of time, for the for Bitcoin to consolidate into this area. But I really like it here. So 950 for, and again, it's a breakout. So I'm really happy. So there are a lot of breakouts that are happening usually in the pre-market, All right. So going back to currencies and currency pairs. So incredible strength in the pound. So I see incredible strength in the pound. And this is coming from a daily continuation, just triggering price action above this high. You really launching higher into this prior high right here, 37.3751. Also notice that we have a prior low that is determining the rotation down from this swing high to swing low back in September. So I always like to have like the higher time frame participation into the smaller time frame, and then I zoom in. But in this sense, it's like this really is poised for a continuation. It's not going to be as dynamic as it was because it's lacking the tradable void, but we're hitting this cluster right here. So if we're going on a smaller time frame, you can see that we already had a breakout. Wow, another breakout. So the breakout came in, it came in at 615. Stop would have been here into the 37 and looking for targets into 37.65. But again, this is like shoulda, coulda, woulda type of trade because it already happened. Right. So at this point, I'm not shorting it. There's a reason why strong indices or stocks or Forex currency pairs are into the high. So there's a certain reason I don't short without a reason. And because I'm a trend trader, I tend to look for pullbacks. So I'm really quiet within pullbacks because sometimes the pullbacks are really shallow. So for example, here we had a little bit of surge in volume at 4 o'clock, and then we really didn't have the continuation lower on this 15-minute in the pound. So you can see that it's really tough to short something that is in a really big dynamic trend. So at this point, that's why I wait to see a little bit more confirmation as to where the price is going to go. But it seems only normal to do the breakout in this area. However, the euro dollar at this point is relatively, I would say, relatively flat. So we do have the low and the higher low. And again, we do have news that is coming in at 8:30 a.m. We do have the core retail sales and the retail sales that are highly to have a really high impact into the market. And I call this the shake and bake at the open at 9:30, because from 8:30 to 9:30, you're going to have like new price gyration produced by the news. And then first of all, the reaction is going to come at 8:30, and then it's going to quiet down a little bit, and then the New York trading investors are going to hop in and try to pick up where the 8:30 news left off. So that is going to be another big gyration into the market. And again, we still have news that is going to come in at 10 o'clock. So this whole week has been really, I would say, impacted by all of these news, press conferences, et cetera, that we've had. So yeah, I think that, and of course, we did have quite a few FOMC members delivering speeches this week. So it's going to be, Other than that, yeah.
Given where we're at right now, everything is looking at the charts. What's your best FX trade that you want to do right now? Do you want to get
best FX trade?
Nothing. I know nothing looks extraordinary, but if I put a gun to your head, which I always like to do to all my traders, give me a trade.
Yeah,
and same to you, Chris. Tell me what FX trade you'd want to do right now.
I want to be mindful that the event risk is going to have a bit of a consolidation for U.S. pairs and to some degree some of the other crosses. But I think I'll take a short on Aussie New Zealand at 105.11, and with a stop at 17.
Okay,
and the limit might even just be down on the big figure, down around 105.02. So just looking for a little bit of a move there, because we're really seeing a real drain on that cross. So I like that one. And then if I can do something really daring,
yeah, always.
I meant
to ask you just to freeze that chart, because go ahead. You call the trade, and then I want to talk about this chart. Go
ahead. Short pound dollar.
Right.
Nice tight stop. Tight stop. 37. Right. Stop at 37.58. Limit at 37.41.
Okay, good for you. That's my bread and butter setup. Short the highs, baby. Short the highs. Okay, what is this thing on the side? This red.
Oh, that's so that's volume profile. I don't usually have it on there on very many charts, but it's really just measuring new price changes, which is really we did a lot of studies on volume and tested a large number of clearing firms and the volume running through the firm. So we basically found that there's about at least an 80% correlation of volume between one entity and another, and so this measures new price changes. So it's really reflective of volume. So it's not really telling you anything you can't already see in the candlesticks, but it's just more visually friendly. It's easier on the eyes.
Wait, can you explain that a little bit more? So you see that big bulge of this bulge of red over here. What is that showing?
So what this is just representative of the number of transactions and new price changes that have taken place within this area. So obviously, as price over time is consolidated in this area, you're going to see a larger representation of transactions. So you see right here where you've got a very inefficient segment of this leg. This to me represents a lot of weakness. In fact, this entire leg is pretty flimsy in my view. And you'll see that represented over here. You'll see that there were much fewer transactions in that area. So you're not going to have much liquidity or much inventories represented in this area. So when price gets in and around that area, and let's just say that in this particular case, it's only a couple of pips, but let's just say that this is a much larger scale. Like, for example, over here, you can see you've got a much larger scale area where you've got pockets of thin liquidity. So usually what happens is as price rises, it leaves deposits and inventories within the system. And so what happens is when price comes down to this area and then breaks through, you find that it slips, and price will slip through some of these areas as price is looking for liquidity. And so this is really just some areas that give you a sense as to what you can really see also on this leg right here. Does that make sense?
So so sort of extending this into the future, if we were to use this analysis, let's imagine cable goes through the, let's say it goes to 3,800, whatever, on that chart. Can we go back to that chart, guys? Extending into the future, it goes to like 3,800, and then it starts dropping. Your thesis would be that because there's very little liquidity in that 37, what is that, 3730 to 3750 zone?
Yes.
It will hard through that. And by the way, clearly your trade is starting to work a little bit. Where did we get short on cable? That was
51, was it?
Yeah, 51. So that cable trade is working. All right. So okay, let me go back to Anka, because I don't think you've done Aussie, Kiwi, and cable. Anka, you wanted to short cable, but you didn't like, you didn't feel confident just yet in it. What do you, anything you might want to do here on the FX side? And if you don't want to do anything, yeah.
Okay, so what I'm seeing here is that, again, really strong consolidation into the dollar again. Possible long 114, 114.38 on a break of 113.38. It's not something that is really in my comfort zone, especially ahead of news, but 114.38 stop right at this 20 SMA into the 114.20. And profit target into the 114.50.
Got it.
Just a
so,
small
one of the things I know. Yeah, go ahead.
No, go ahead.
No, one of the things I noticed about the way you sort of analyze charts, which I think is really interesting, is it seems like you have a hierarchy of importance. And the first and foremost importance is price action itself. So you're going to analyze the highs, lows of candles, and the breaks of absolute price levels are the most interesting thing to you. And then the secondary piece in this hierarchy is the moving averages, the conditional stuff. And then I wanted to ask you, we go back to maybe Anka's charts. What is the oscillator on the bottom? What is that? How do you use that? What is that?
Okay, so yeah, good question. So this is a William percent R. I have been using it for a very long time. This is typically an indicator that I use for stocks. It also super helpful in futures indices that where I notice divergencies, I kind of like gives me a heads up when to buy the dip and when not to buy the dip. So it's an indicator that is really easy to use. For example, it has two levels right here. It has the -20 and it has the -80. Everything that is above the -20 is into overbought, and everything that is under 80 is oversold. When you want to buy the dip, for example, you want to see a confirmation, for example, of a low and a higher low. So for example, here, this is an oil, and this is why I have been bullish all this time in oil, because it hasn't really gave us any kind of clue as to a topping sign. And I think it's a really high demand with everything that's going on, and it still has room for the upside. I mean, look at the context of this sideways range. So going back to the indicator, I would like to see a low and a higher low, and that would be the time where I would look to buy the dip. This is super helpful for example, when the market is into a lot of pressure, when the market, for example, through the pandemic. So I could give you an example with the, for example, with the mini S&P, and I can put it on a weekly chart. So we can have the pandemic high and low. Let me just take these lines out. All right, so as you can see here, okay, so we have this low right here. This is actually like a head and shoulders. So you're reading the same kind of patterns into the—
Wow. So you will apply pattern analysis to the indicator, to the derivative, as well as the underlying price.
Yes. Because I am a trend trader, I'm looking for all the clues that any chart can provide me, in the sense of volume, in the sense of William percent R, in the sense of rotational patterns. So I saw a really big pull to the downside, and this was, let me just zoom in here a little bit. All right, so here it is. So and this was actually the the pandemic low, but it was not the exact low, because you can see that we had a little bit of surge. So following this low right here, so I started to be very bullish on here. Let me see, I don't have the date here. Okay, so here it is in March. So it happened at, I can tell you exactly when it was, because that's when I went long. It was on March 26th. So I had the first break, so it didn't happen. This was a consolidation week. It was a digestion week. So basically we remained within the parameters of the high and the low. And then the following week, this was the entry price. This was the stop. And then targets came into prior lows. Again, these bottoms now become minor resistance areas because they are upside down. So for example, they're not trending higher, but they're upside down. So prior support that now becomes resistance. And this became the target 1 area for that reason. And then the target 2, again, into these prior highs again, and then up we go. And once we have the consolidation above the 10 EMA, 10 EMA is a dynamic moving average that I have been using. Again, like these moving averages have been using for as long as I can remember trading, for 20 years.
Sorry, can I stop you here and just, can you go through the moving averages that are this your bread and butter? You have the 10. What other?
Absolutely. The pink one right here is the 10 exponential moving average, and it is the only exponential moving average. When the price is really strong and ongoing and trending powerfully, it really follows. So the 10 EMA really follows the price.
Yes.
Then I use the 20 simple moving average, which is more of a magnet type of trade that I used it in day trading. So any kind of pullback in an ongoing trend into the 10 EMA, it's likely to rotate off of this level. Then I use the 50 simple moving average. I typically like to use the 50 simple moving average, not as much into day trading, but I use it for swing trading because we have pretty good hefty pullbacks into the 50 simple moving average, and especially if they line up on the daily charts or the weekly charts, they're really good. And these are, for example, pullbacks that are a little bit more significant than the pullback into the 10 exponential. And then I have the 200 simple moving average, which is the king of all moving averages. And this is kind of like the line in the sand. It's bullish above and bearish below. But again, if you're getting a rotational pattern along with, for example, a read and the Williams R into the oversold, then you will look to see, hey, how is this going to impact the price? And you can see here that the 200 SMA was the lid. So it was the resistance. So it was resistance on this candle, on this candle, and this candle. So it was obvious that a break above is really going to start moving the price a little bit higher.
Yeah, you can really see that. I mean, the S&P was one of the greatest V bottoms in the history of trading.
Exactly. So yeah, and again, you know, if you're looking, for example, what happened in the last couple of weeks now, so we have been trading off of the 50 simple moving average. So tap here. So first of all, let's go a little bit back. So tap here, and rotational. Look at the rotational patterns. Around the 50 simple moving average. So the price kind of has favorites, and at one point or another, for example, the S&P likes the 50. NASDAQ, for example, likes the 20. So each index has its own favorite, and right now, any kind of close above this 50 SMA is going to be super dynamic and lock the price higher. So
wow, that should be. So is this today? Is this where we're at today, right now? Like So today could be a very telling day because we're basically, if we hold above the 50, that could be a very bullish signal on the S&P.
Exactly. So we have already issued a continuation here. So the high from yesterday was 44.3725, and we have already triggered higher. So in terms of continuation patterns, we're looking for, you know, an extension higher into the 60-65 area, at least into the prior high.
Right. Super. Very, very
nice
interesting. All right, guys.
Yeah, nice head and shoulder. Right shoulder, head, left shoulder, and this would be the neckline right here. So this is setting up for a breakout.
Yeah, really interesting chart. Thank you so much. Fascinating. All right, guys, you're doing all great. We've gone through 2 challenges. Now it's time for us to go for the final challenge. At the end of 2 challenges, Anka continues to power through. Primarily because of her great S&P pick right now. We're obviously, 30 minutes ahead of event. Anka is also long dollar yen, which is implicitly a positive bet on retail sales. We'll see if that works for her. Chris's gold trade busted out, but that was exactly what you want to do. It was either going to go or not, and I guess the 8 o'clock time frame just kind of failed on the move, and probably also, Chris, today, because the market is just jittery in front of retail. If retail sales comes in hot, it's just going to put so much more pressure on yields. It's going to put downward pressure on gold. So I think probably gold traders are a little bit skittish. But now is the time for us to take a look a little bit longer into the weekend and perhaps even into next week. Our final challenge that I want to pose to both traders is, what is the best trade going into on a longer term time frame? What looks better for you on the charts? Something that you think will survive the temporary noise of retail sales, or something that may just not even be affected by it. So crypto, oil, gold, indices, FX. Tell me what you think is your better trade. We'll start with Chris.
So for me, it was a question, or it's a question between the Aussie yen. You can see here on this daily chart, we're just up to some simple resistance. This is, that's a monster waiting to be sold. And then if you also look at
I like your thinking. I like your thinking. Most people would look at that and go, "Oh, this is such a monster buy." But I love your thinking because it's just it actually when it looks best, it's the best time to sell it. Okay.
And then you got the Canadian yen here as well. But if you look at oil is still like reasonably well supported at the moment. I think it can probably correct a little bit, but it still has some flows. The other thing I wanted to point out here on the Aussie yen was, you see this price behavior like right in here. This is really, really flimsy, in my view, and this can easily give back.
What can you explain to us why this is flimsy in your view? What is it about it that's problematic?
So
in your opinion?
If you were to kind of fraction this out, you can see there's little pockets of liquidity. Markets spend most of the time in this range, and less than 20% of its time making new levels right here. But so you've got some smaller pockets, a larger pocket, smaller ones, and then you see we have this last final move in towards 85 big figure, which is usually big figures are great levels to sell on Aussie yen. And so as we're pushing up into this area, if you take us down to the smaller time frame, you can see
what time frame was this, by the way? That was a daily?
That was a 60. That's a 60 right here.
60 minute. Okay.
So heading towards 85. But when you head up here, so you see how thin this move was. Usually you've got some liquidity around the big figure. You've got options expiries, knockout options, and other aspects of liquidity around that area. So you can see it hits on it here, and now it's kind of getting a little bit more volatile in comparison to the move up into that level. So you can see we're starting to hit some resistance. So in one of the possibilities I'm looking at is I'd like to take a short here, but I think that when we have the event, we could pop up here, and then sell off into this leg.
So why don't you just give it a little breathing room, like maybe double your normal stop, so that you can survive the event in case it pops, and take that trade.
So I'd say
I want to tell you how to trade, but I'm telling you how to trade.
I'm preferring the Aussie yen over the Canadian yen because oil is still supporting Canadian dollar to some extent. At least at the moment. So I would think that if the equities markets corrects, the Aussie is more subject to correction, along with a move lower or stable in the yen. So I like short Aussie yen here. We could wait for some upticks, but we'll just take it here, and with a stop at 85.15 to try to stay out of the way, and hopefully 85 protects it. And we're looking for take profit down around, call it 84.10, I'd say.
Wow. So can I ask you, this is it's a very, very skewed risk reward ratio. Is this something typical of your setup? Like, are you trying to go for like this 1 to 5, 1 to 10? I'm going to pick a top, I'm going to pick a bottom, and it works, it doesn't work, I don't care, because my payoff is going to be huge when I'm right. Is that a methodology you use a lot?
So for intraday trades, I'm using average gain to loss ratio over the last, measured by the last sample size of 20. Because I'm moving my stop a lot and protecting my position, and just trying to first protect the position with taking on some equity at potential initial response. So, but this is different because I'm trading it unleveraged. So this would represent a certain percentage of my portfolio, and it's unleveraged. So I usually, when I'm trading unleveraged, I'm not using any stops at all. But for the sake of this battle, I mean, when you see a move like this, I wouldn't use a stop. I trade unleveraged because you're highly likely to see some pullback in here, and it's just a matter of
that is such an interesting approach. And I think it's I'm in agreement with almost everybody that you almost always have to use stops, but stops, it's a very blunt instrument, and it's not the only way to trade. You can also reduce risk by literally, as Chris is doing, using no leverage. It's essentially an investment position. The advantage of that is obviously that it just buys you time. It doesn't mean that you don't stop yourself out. It's just that you don't force stop yourself out. You have the leisure to process the new information, decide, it's immaterial, or no, this is definitely a significant change. I don't want to hold this. But it basically buys you time, so you're not subject to the intraday market swings, right? That's sort of your approach.
Well, it's like saying, where's your stop on the cash in your bank account, right? Where's when you get a paycheck, where's the stop on that? Because if you have $1,
if you ask my wife, the paycheck is at negative 20. But yeah,
if you have $1, you have FX. You have an FX position, right? So all we're doing here, because if price were to continue higher and you don't have a stop, price goes up and down and up and down, and you've got a lot of time to wait for this to play out and decide whether you want to bail on the trade or not, right? And it's really just a matter of percentages and keeping your risk at bay relative to your portfolio valuation and other positions that you are maintaining.
Right. Super interesting. All right. That's very, very interesting. Okay. All right. Let's turn to Anka. What are you looking at as a longer term idea into the weekend, perhaps into next week?
Okay, so if I may, I want to circle back a little bit to what you guys were talking about the stops. I couldn't agree more about the stops, because I think that whenever you see a trade that goes parabolic, it's really hard to put a stop in. You're just going to get dinged out of the trade every single time. So what I do is I typically use half the size and double or triple the stop. So you position size way less than you should on any normal trade. So I totally agree. Like, I love Chris' explanation of it with the bank account. Like, put a stop with a bank account. All right. So going into the weekend and actually going into the next week and the following weeks, I think that rough price is into a very nice consolidation pattern. And because, again, I'm a trend trader, I like to see a breakout over $14. And this is, in fact, the November contract. The December contract is already
I'm sorry. What is this? What is this instrument? I didn't quite hear you.
This is rough rice.
Rough rice.
Rough rice. Yes. This is rough rice, and it's had a really nice consolidation with the breakout. And now it's pulling back, and you can see here that we have a little hook. This 10 EMA provided this hook here, and it's really ready to break out. So this is a nice kind of, like, if you will, either pull back or a breakout or bull flag, whatever you want to call it. It looks really ripe to start moving higher above $14. And in fact, like I said, this is the November contract, and the January contract is already trading over 14.12.
Right. Could you, the producer's telling me, could we use smooth rice as a substitute since we don't have rough rice on the platform?
I don't have smooth rice.
Okay. Well, rough rice, smooth rice. Well, what's the difference? I like sushi anyway. I'll take it.
I love sushi.
I'm kidding you. We will. No. Oh, my producer's telling me they don't have rice at all. Okay, so he's you cannot joke with me, my producer. I don't understand jokes in the middle of a show.
We'll do some pancakes. Yeah.
We'll do some pancakes. So,
keto.
What about, like, let's say, sort of like, oil? I want to ask you, like, I mean, would you go long oil? I think that's probably an interesting longer term trade, given the fact that you were saying how it's holding support, how it's
yes, I think that, okay, here it is. I'm going to try to find the fibs here, because I did have For example, right now, 127.2. This was a swing target for it. And by the way, I'm long USO from when it was like $2 last year, and then it had the split, and I've been holding it ever since. So it's just actually going really nicely well for me. But yeah, it does have another target up here into the $86. And don't forget that Goldman Sachs has a price target of it of $90. So I think it's really, really, really pushing through that wanting to go.
Just given all the headlines that we're all watching, what's happening in China now, where they're like just shoveling coal into every industrial plant they can because they're just running out of energy. It just seems like this is not going to let go quickly. You're not going to get capacity supply coming on board quickly right now. So I think so. That's an interesting thing. So we're gonna put Anka long oil into her longer term trade. Chris is going to be short Aussie yen ahead of the news and just holding the position. And I want to ask you now, guys, a little bit about your own business. So Anka has a really, really great chat room called Trade Out Loud. You want to tell us a little bit about what you do there and what your day-to-day life is like in the chat room?
Absolutely. This slide would actually sum up everything that I do in the trading room. So we are focused on futures, indices, gold, and oil. Of course, we look at other commodities and other instruments, for example, bonds, etc. But this is my bread and butter. I trade futures indices every single day. And I only trade about 2 hours and done. So only for basically the room is for day trading. Any other long-term ideas in more of a stable kind of market environment or a swing environment, if it sets up. So for example, for this move right here, I was not long any kind of futures indices, but I am long SPYs and Qs, but I don't want to put all the eggs in one basket. So I'm a little bit diversified. And in the trading room, I call trades. I basically call all the trades that I take in my personal account.
Is it 9:30 to about noon? Is that you said you trade 2 hours?
Yes, it is 9 o'clock. We do a pre-market game plan from 9 o'clock to 9:30, and then at 9:30 when the market opens, I walk traders through every single little detail that I see. We do analysis on the indices with relative strength and weakness. Because we have just started earnings season, this is going to be fuel for the indices. And first of all, there's going to be more participation in Dow and the mini S&P because financials, energy stocks will be reporting first, and then we will have the tech companies that will come on board. So the attention is going to shift. So the way I trade futures is in a very strict correlation with the stock market, because I've been trading the stock market. I've started trading with the stock market many, many years ago, 17, 18 years ago, professionally. I love to bring that blend from the stock market with relative strength and weakness. For example, if I see Boeing that has a really robust structure, if I see UNH or Home Depot, of course, my attention is going to be shifted towards the Dow and trading Dow versus the mini S&P. So for me, they're not all created equal. So I really like to bring that blend from the stock market to the futures market.
Interesting. So you use cash to get a handle on where the futures are, and then obviously you use your technicals. Like if you have a thesis, you say, okay, you'll see cash getting stronger. You say, I think Dow has a chance to get up here. Once you get a confirmation of the Dow on your time frames, that's when you go in your trades.
So for example, right now, like JP Morgan and financials are super strong. So JP Morgan has just reported earnings on the 13th, 2 days ago. And that's one of the reasons why the Dow is really, marching higher, because it's really strong. It has a lot of components that are strong. Interesting.
So you do a lot of subcomponent analysis. Super interesting. Thank you so much, Anka. And Chris, tell us a little bit about your, your room and what you do on a kind of a day-to-day basis.
So on a day-to-day basis, I mean, I at Pro Traders Club, we have core education. It's really, really involved from price action is probably a little bit too general of a term. We get into some considerable depth in terms of price behavior, liquidity, price relationships. In relation to liquidity, we trade the fractal nature of the market. So what I mean by that is we're talking about the fractal nature of the market from a geometric fractal standpoint, where patterns of self-similarity. So we study it highly intensively on the smaller time frames, and therefore it's scalable.
What is the smallest time frame you go on a fractal? Like what's your building block, and from which do you then build your thesis?
So when we refer to fractal nature, we're talking about a price behaviors that has self-similarity. So if there's a certain, and there's many different interpretations of fractals. So if we're looking at price moving into a area that's either where liquidity is heavily present or thinly present, we look for certain types of price behaviors. So, and with fractal nature, whether it's a short-term time frame or a long-term time frame, the behavior is going to be highly similar, but the tempo of the movement is going to be different relative to time scale. So, and I don't want to make it sound too complicated, because it's not really. It's just a matter of studying the behaviors and adapting them to basically to your hold times. So that's. But really, we get into considerable depth in price action. We do have a lot of content on fundamentals, and so what I do is about usually average 3-4 times a week. I'm producing videos ranging from 15 to 30 minutes on average, and then we conduct live sessions. Probably on average about once a month, we do a live session. We'd have people will submit their questions to me, and I will get into, and I will create teaching opportunities out of the questions that are posed to me. I share my swing and position trades, and then I record a lot of short-term trades, and then sometimes from time to time a short-term trade might present itself during a live session.
Right.
So there's
a lot of teaching moments in your content.
Yeah, there's because it's typically best to teach during a live environment.
Yeah.
And when you're recording or talking through something in a live environment, because you can actually see the high level of detail play out in the environment at that time. So we're trying to do as much of that as possible. And I've got a lot of responsibilities, so unfortunately I can't have a consistent schedule for a live show. So. But yeah, it's great.
It's fascinating. I love your approach. It's a super interesting approach. Both of you guys have been incredibly interesting in our trading battle today. As we come to the end, let's take a look at the scoreboard. They're both relatively evenly matched, with the exception of that gold trade. So, we could just throw out the gold trade, and Chris would be, you know how you take the high low when you play golf. You take your worst. It will give you the mulligan on that one. But other than that, relatively quiet markets, obviously, into Friday, which they're going to explode. It's going to be fascinating because a lot of these positions are going to completely change course in the next 15 minutes once the retail sales pops and we get a good read on whether the U.S. economy is really heating up, or whether the consumer is maybe starting to feel the pinch of higher prices. So we'll see how that plays out. Basically, when we're looking at the positions now, sort of to summarize, Anka's S&P trade has definitely been the best trade on the board. That's working very well for her. The Bitcoin is flat. There's $2 yen positions. I don't know why there's two. I guess they put you into $2 yen positions, but basically that's an implicit trade on positive retail sales. If retail sales are positive, it's very likely she's going to get 1450 on that trade. And then oil is a longer term trade for her into the next week as the energy crunch continues to really affect us all. And then on the other hand, Chris's just take a look at the scoreboard for Chris. His Aussie yen trade is to the short side. She is her nominated charity is Top Gun Fighter. Chris's Chris's position is I lost a little bit of my train of thought. So Chris is long on the S&Ps. He's long ETH, which is also positions that could completely change themselves over the next 15, 20 minutes. And then, he's short the pound, which actually was working well for him. But what's interesting here is that it was a very short retrace, and Anka was absolutely right in the sense that this is such a powerful move right now. You don't want to be short this thing until it kind of shows you some weakness. So we will see how everything adds up. As always, it's been a great fun to have everybody at Trading Battle. Make sure you sign up and follow us every single week. We have more great traders coming for you. In the meantime, we'll update everybody. Thank you again, Anka, Chris, for a wonderful hour of trading and lots of learning information.
Thanks for having me.
You guys.
Thank you.
And for Trading Battle, this is Boris Schlossberg over and out. We'll see you guys after retail sales. Take care.
Great. Thank you.
Thanks.